Hello, everyone, and welcome to Chartwise Women with your hosts, Erin Swenlin and Mary Ellen McGonagle. Come one, come all to our virtual living room. We're happy to have you join us here today while we chat about the markets and how to trade, how we like to trade, and our wisdom. We're here to engage, educate, and mostly empower you to take control of your investment accounts. You're the one who cares the most, so that's why we're here, is to help you do that better. How are you doing today, Mary Ellen?
Yeah, doing great. Just I do have we have an extra guest. My daughter is back. She has viral pneumonia after
Oh,
traveling the globe, and they were a little bit concerned because she had been to Indonesia, Korea,
ah,
Australia, elsewhere. She just got back on Sunday and whisked her right to the hospital. But
oh my gosh.
she's resting very, very comfortably, and all is well. But just a word to the wise that it started out as bronchitis about a month ago, and it just was not properly treated, so it just advanced. So if
Turned
you're
into an
if you're
infection. Yep.
if you're feeling under the weather, don't
Yeah,
ignore it.
I would have to say, with the whole, coronavirus as a concern, and of course, it does seem to be somewhat affecting the markets. I know I've been especially vigilant. Fortunately, as my husband says, I love that you work out of the house and hardly ever leave it. So I guess being a
You're
hermit is going to work to my advantage.
your bubble.
Yes, exactly. So trying to stay
Uh,
healthy, and hopefully you are staying healthy as well.
yes,
All
indeed.
right. Well, we have a lot of information to impart today. In fact, I already know, just going out the gate, we're not going to be able to cover everything. So I will be giving you information on how you can follow up on some of the stuff we're going to talk about today. But let's go ahead and look at our agenda. We're going to start, of course, with our wisdom of the week, where we give you our short and sweet things that we've found through our experience in trading that you should think about as, kind of little mission statements, that sort of thing. So we'll go over that. We're going to concentrate today mainly on trading chart patterns, and we don't want to get too heavy into the technicals, but I think chart patterns are one of those things, Mary Ellen, that's really accessible to people.
Yeah, absolutely. It's interesting for me. I got introduced to the wonderful world of equities 20 plus years ago. And I can recall when I saw my first chart, I just wasn't sure which way to hold the page.
Right.
It was that confusing. It reminded me of those cardiograms. And uh, so it, over time, getting to know these charts and learning how to interpret them has really been an amazing journey. So any of you that are newer to the markets, I would urge you to take that time and really get to know just what those charts are telling you. There's just so much information that's being mapped out on that particular chart. So it's
Which does actually, I think, bring us right into the wisdom of the week. So we'll go right there.
already.
So my wisdom is keep sharp tools in your toolbox. So you don't want to have a whole lot of tools, but the ones you have, you want them to be very useful. And with today's subject of trading chart patterns, I would say that is one of the sharper tools in my toolbox. So that's why I wanted to talk about that today.
Mm-hmm. Yeah, and I would agree. My wisdom of the week for today is that charts are like a treasure map, and they can lead you to great riches. Again, once you can interpret that. From my work, I worked for many years with Bill O'Neill, and his work is very soundly based on this concept, and pretty much every big winning stock going back over 100 years, I'm talking stocks that go up 1,000% plus, they all begin with the breakout of a base. So that's important. But also learning how to read these treasure maps can keep you out of the poorhouse as well.
Absolutely.
Yeah, get you out of those stocks in time. So
Yeah, and I think one of the cool things with the chart patterns too is it gives you some targets, the minimum upside, downside targets, sort of like that X on your treasure map of where you're trying to go.
I like it.
So we'll talk a little bit more about that, but let's go ahead and jump in, and just in a general way, we'll talk about you know, the different patterns that are out there. And I'll tell you right now, there are a lot. And I put together a list, and we can go ahead and look at that list. And it's rather exhaustive, but not totally. There are still lots more chart patterns. These are pretty much the ones that most technicians are looking for on a chart. And it's a visual thing, you know, a bull or bear flag, for example. Well, it looks like a flag. The triple bottoms, you've got, you know, you can see the points. The double bottom, you can see the W, you know, that type of thing. So a lot of this you've probably seen, but maybe you didn't realize that you can use what you're seeing in a very generalized way to give you some, you know, an expectation of either an upside move or a downside move. So we will look at some of these. We're not going to have time to look at all of them, but I did do a workshop. Actually, I've done 2, and I'll show you how to get to those workshops at the end of the program. But they're excellent follow-on for this if you want to learn more about how these work. I still kept it very general in the workshop, so I think it's you know, very accessible to all of our viewers. Maybe, you know, our beginners to our advanced viewers. I think it's a great review for the advanced, and certainly a perfect introduction for beginners. So
yeah, I think it's important to mention too, with when you're looking at charts, how the trend following really is all about using history as your guide. And it's just uncanny how history will repeat itself again and again. So when you see these patterns, they're worthy of paying attention to.
Absolutely. So I don't want to get too deeply into a bunch of patterns before our break, but let me just, I'm going to show you real quick just a few, and then we can move into the break and we'll look at more. But I'm going to go ahead and bring up my screen here, because I do have a few that I can show right away that are, that I've been watching for a while here in my decision point alert. So one of the patterns I think I will start with, because I'm going to be able to get it from one of my lists here already. And one of them is with TLT. This is the 20+ year Treasury bond ETF, a vehicle a lot of people will trade. As I said, you know, ETFs are pretty helpful. But the pattern that arose on this chart as we were going along, you can see this, is this what we call a falling wedge. So you can see that the declining tops and then the bottom of this, they're coming to a point, but they're both moving down. So that's a wedge, and the falling wedge is a positive pattern. So you're supposed to expect that price will break out to the top of that. Of course, there are other things to consider as you're looking at a chart and a chart pattern. This is just your just one of your guides to maybe bring it onto your radar, because that's what happens for me a lot of times is I'll look on Candle Glance or some of the charts that I'm reviewing, and a chart pattern will pop out. And so then I'll pull up the chart and then I can decide if it looks really interesting. But the expectation from this was a move to the upside. And as far as targets go, the measurement here at the back is where we were expecting the move to be from the breakout point. And we almost made it there, not quite. Now we formed a double top, which is a bearish formation. You can see sort of that M that's starting to shape up there. The expectation, of course, with this is that you will come down here to the middle of that M and you will break down. And the breakdown will be about the size of the pattern itself, which would put things probably right in this area. Let's see, about here for some as a target, which would match to me these tops, possibly the support line way down here. But right now we're having a pretty good day on TLT, so the pattern may not actually materialize.
Interesting.
Yeah, so that was one of the patterns, and that we're talking about. Again, it's just you look at the picture and you start drawing some trend lines, and these will pop out at you generally pretty quick, especially like Mary Ellen, you were saying, the more charts you look at, the more you see these, and the more you can pick out information.
Mm-hmm. The more that they come to life for you, and the more confidence you can get as far as precisely what they are telling you.
Right.
Yeah,
All
I
right.
tend. Yeah.
Go ahead.
I was just going to mention I tend to keep mine super, super simple. I only have a couple of chart patterns that I zero in on, and that for me really helps simplify the process. It's not to say that other patterns aren't going to work, but I would point that out as for individuals that are looking to get started at looking at charts, find a couple that speak to you, and it'll help your process and then you can broaden out from there.
Yeah, absolutely. Real quick before the break, this is an easy one. Trading zone, right? Trading range. This is a rectangle, right? Shaped like a rectangle. So basically the rectangle is just a trading range. And of course, getting in on the bottom of the range and trying to ride it up to the top is what, I mean, a lot of us try to do when we're when we're trading. So spotting these trading ranges is usually helpful as well. And then if you look here in that thumbnail, what pattern does that look like? We got a W.
Mm-hmm.
So that's that double bottom that I was talking about. So another
Is that a
expectation for
daily or a
buyer.
weekly chart for some
This
reason?
is a daily chart.
Oh, okay. Mm-hmm.
Yeah, for USO, the oil fund. And oil and energy have been hurting, but it looks like the momentum's starting to shift here. So
And
could see that.
when you're looking at that double bottom, do you find it more powerful if it is a weekly or no preference?
You know, depending on, I know that the guy I studied, he's got a pattern website, but I like them in the intermediate term more so. Like this is a pretty nice big intermediate term pattern that you can even see on the weekly. You know, for this one, there's that big rectangle going on there. So I think the longer that that pattern's had to develop, you do tend to, I think, get better results. But I don't see that.
That is actually a fact. There's historical precedent. The longer the base prior to a breakout, the longer the advance out of that base, which is why I was wondering about that. And yeah, so.
Yeah, absolutely. I'm just looking, I was looking back in history here. And there's a shorter term, well, it's not that short. This is a weekly chart, but there's a double bottom and it came out, but it didn't execute. It didn't work the right way. So, you know, there were things going on here. If you look, momentum was just like falling out, falling from the sky. So probably wouldn't be
falling out of bed.
That. Yeah, exactly. So there are things, you know, you can pull the pattern up and say, wow, that looks great. But then you really do
and
have to be at
the SEC be above.
Hmm?
Oh, I thought that the second bottom had to be above that first one.
No, I mean, they can be different.
But
and honestly, I kind of like it when I see them a little bit different because then you can make make sense of it using volume. You know, if we got, you know, more volume on this deeper decline, or we saw, you know, a positive divergence where, you know, maybe the volume was a little higher on this low than it was here. So then you're actually getting a positive divergence on those. So getting a little bit of swing on one side or the other, I don't think is a bad thing, because sometimes it can clue you into, you know, by being able to look at, you know, say the volume patterns. So anyway, let's go into the break and you and I'll chat some more. I know I had a chart, a real-time chart, but I think you were looking at some real-time charts too with some interesting possible patterns going on there. So let's go to the break and we'll be right back. All right, we are back and we're talking chart patterns today. These are those, you know, the things you can find on a chart that gives you a sense of maybe where the stock price is going. And I love these. I've always been pretty much excited about these just because they're so visual. You can just, they just are, like I was saying earlier, just super accessible, I would say. So anybody can kind of see them and understand them. So Mary Ellen, this is a chart that I had that I looked at as a diamond earlier this week. And diamonds being, I have a report where I pick out 5 stocks. And actually this one was a viewer requested symbol that I actually fell in love with for a bottom fishing opportunity. I know I pulled this chart up before the show, and Mary Ellen's like, you weren't very excited about it. This is a bottom fishing opportunity here. These are kind of high risk. I liked this one because we're at all-time lows. And so to me, even though this is not the best looking chart ever, I'm in that trading range, right? And I'm at the bottom of it. And those happen to be the lowest it's been, like since this ETF has been around. So to me, when I see something on a low, something that beat down, I think it's interesting. And then I was noting that possible short-term double bottom right here. So,
well, I was going to share my screen very quickly.
Yes, please show us something that I know you like.
Oh, well, we can do that as well. I thought I'd just add on to this XES that you were just looking at, the Oil and Gas Equipment Services ETF. And I can see this bottoming potential that you are looking at and potentially seeing here. But I wanted to highlight for you what a positive downtrend reversal looks like. So we go back here to December, similar bottoming period, but when the price breaks back up above that green 10-day and up above the 50, then we have the green line, which is the shorter term 10-day up through the red 50. That's called a golden cross, and that's going to be a heck of a lot more constructive for me, and I would play the rally only up to this next area of resistance, which on my chart is a 200-day simple moving average. But as long as this is in a downtrend, your odds are very low, and sure enough, it was denied. So just a little bit of insight. I can just share maybe one pattern, one chart. Yeah. So
well, you can share as many as you like.
Well,
you know, I love to look at them, and hopefully everybody who's watching likes to look at some charts too.
Oh, I'm sure. How could you not? Yeah, so the work, again, just harking back for 15 years, I was with William O'Neill and Company. And for those of you familiar with Investors Business Daily, I was working on the institutional side, working with portfolio managers. But the reason I'm pointing that out is that you may be familiar with that concept of a cup with handle. And I think a lot of people don't really understand what it is. So it's one of my areas of expertise as it comes to charts. So I'm just going to share with you quite quickly. This is HubSpot, HUBS, and it just had a breakout today of a handle with a cup with handle. So the formation here that you're looking for is when a stock hits, in this case, a near-term high in price, and it pulls back. Now, this is those software stocks. It was in line with the entire group, but it did not recover until more recently. So this is your cup formation. Really important to note, because a lot of people think that the cup comes up to the prior high, and that's not the case. It's going to oftentimes, it's going to be about a third below this prior high. So we are just forming the right side, and then we have this handle, flat back and fill base. So there's your cup. Oh my gosh, I'm just going to take a minute and annotate it, because
why not? Come on, let's do it.
Bring it on. Yeah, because I know my cursor's not that large, so it might not be as easy. So here's that high. Then we begin to form the right side of this base, and again, about 1/3 of the way below this prior high, it does then go on to form what is called a handle, and that is this flat period here. I can get rid of that little arrow. So hopefully that's a little more, you can see your cup with handle. And then today's breakout is classic. It's up 8%. And it has everything to do, of course, with earnings. When you see these gaps up, oftentimes it is going to be earnings driven, but this is an absolute classic cup with handle breakout. So
absolutely. I've got something, a similar pattern. The handle's a little bit more complex, and so I certainly would be interested in what you think about it. Let me go ahead and share it. But I've been looking at the gold miners, and they kind of have formed that saucer, that cup shape, And then I was looking at this as being the handle, and we were starting to get the breakout, but it hasn't. So now I'm looking at this as a more complex handle, but you could also make this little handle here. Let me just take that there into a symmetrical triangle. And those are continuation patterns, which means you're supposed to expect the move to continue up after we get this resolved. But
yeah,
I don't know. What do you think about using that, the complex side there? I mean, of course, it's all generalized, but, you know, and of course, gold miners are a little bit affected by what's going on with gold as well. So
yeah, that is actually a cup with handle base break, a failure.
mm-hmm.
That's a failed cup with handle.
Mm-hmm.
So in order for it to be...
so that would be your handle.
Yeah.
And that's where the failure came.
Right. So we can see that it did not follow through and break out, if you will.
Mm-hmm.
But doesn't mean it's not it's not the end of the world. It's finding support at that 50-day, so it could still have upside. But as classic cup with handles go, that would be failed one. So it's a good point. Not every single pattern is going to work all the time, but certainly the probabilities are there. They're high. They are patterns that are used and studied for reasons, but it's always good to note that every single one is not going to take you to the promised land.
Yeah, and I know there's, you know, I have plenty of historic charts where you can look, and some of them you do end up with those failures. All of these charts I'm showing you here, they are historical. I use these in that chart pattern workshop I was talking about to give you an idea. So for example, that's a flag. I mean, you can see it's upside down, so it's reversed. The expectation is for it to go all the way down here, which it did. But there are plenty of opportunities to see patterns that don't work out just in the, you know, historically when you look at some of these. So, I mean, I find it really interesting, but in fact, here looks like a cup with handles starting to form here back in 2017, 2018, right there. And I suppose we could bring this forward and let's just see what happened to it. Let's see. So that was back here. Failed. See, there's your cup. There's that handle was forming. And then you got that breakdown below that 20-day moving average there, exponential moving average, and the 50. I mean, at that point, if you'd been counting on it, that would certainly be a time to say, well, no, I don't think it's going to work out. So similar patterns. But anyway, so let me just show you really quickly. We only just sort of brushed the surface as far as chart patterns go. So I did want to show you where you can get more information, because I did, back when we were doing Market Watchers Live, I did 2 workshops on chart patterns. I'm planning on doing another one soon. In fact, my diamonds report, I was looking at a bunch of V bottoms. We've got a lot of those going on in the market right now, just because of the way you know, things have traveled. We ended up with kind of a V. But you can go to decisionpoint.com, click on blogs and links, which will bring you to this page. And then on the left-hand side, I have right here my workshop links. And you can go here and get all of your, the ones that I have listed. And you can see at the bottom, I have 2 on trading chart patterns. And another one that people really liked was how I set stops. So anyway, you can go to our site. There are the free links back there. And of course, it wouldn't be a show if I didn't push a little bit to sign up for my free newsletter. So
Sure.
But let's go ahead and move on to, that happened.
Sure.
So let's go ahead. Yes, you go ahead and take over. This is your specialty here, is finding these.
Oh, you bet. Yeah. So what we'd like to do each week, of course, is share with you unusual news that has cropped up. And this one certainly caught my eye. It's a headline out of the UK where food giant Unilever, they're going to stop advertising ice cream to children. And they were the reason this really struck me is I don't know a lot of children that are driving to the market and buying ice cream.
Right.
So I thought, well, perhaps they're targeting the wrong. They need to stop advertising.
Right. And I have to tell you, I find this hilarious because do you think that this will prevent kids from liking ice cream any less?
You know what? We know how it works. They'll like it even more.
Exactly. Now it's something you're not allowed to see or have anymore.
The forbidden ice cream. But really, they're trying to fight obesity, and it makes sense on some levels. But this did definitely tickle me in that sense that maybe we need to start advertising to the adults, advertising, but at the end
or
of the
maybe
day,
lack of.
Thank you. That's the word I was trying.
Although again, it's not going to make ice cream in my mind go away, I have to say.
Oh no, it's a thing. It's here to stay. It reminds me of that supersizing. Bloomberg was mayor, as far as supersizing your drinks, and they have done follow-up studies, and it has had no impact.
Well, exactly. I'll just buy 2 instead of 1.
That's right. Which probably amounts to more than that supersize.
Yeah, so that's another straw too. Sorry.
Oh my gosh. No, this is Unilever. It's not a very heavily traded stock. So when you see these kind of gaps ups and down, but UL, just to take a quick look, they offer Ben & Jerry's is one of their brands. And they're certainly quite popular here in the US with their Cherry Garcia and some of their other famous brands. Let's take a look at Berkshire Hathaway. And I'll tell you why. Warren Buffett, this of course is his fund, purchased Dairy Queen probably about 5 years ago. And very interesting. As you know, he doesn't buy these companies lightly. He drills down, does a lot of work. And I know it was big. He is raised in Oklahoma, and it's big in that part of the world as well as elsewhere. But here's a quick view of Berkshire Hathaway. What we're seeing in the markets, this is a side note, high growth stocks are really doing well. And Berkshire Hathaway would by and large be viewed as a value play. Most of his stocks are value. So you can see it's faltering. It's not where the broader markets are hitting new highs. Berkshire Hathaway is doing the fade away, if you will. I don't think it has to do with Dairy Queen.
No, I don't think so either.
It's much more to do with market dynamics. Again, that the growth is in play. I have one other name that I can share with you, and that is Nestle. Nestle has their own brands as well as others, but the stock is faltering a bit here. This is another rather thinly traded stock. We can see that it's breaking down below key support. Your RSI is now negative on the daily price chart. And then we had this MACD, moving average divergence. You want to pay attention to the signal line, the red, and the black line trading below the red is telling you that upward momentum, it's just one of several signals that's telling you the upward momentum has shifted. So those are a couple of the ice cream stocks that came to mind.
Well, you almost have a little double top there going into maybe even a cup with a failed handle.
Oh my gosh, you are so wise, because that's absolutely what this is. We can see where it is faltering, and take a look at the big volume. We kind of touched on that, but when you see a stock breaking down below these key moving averages on volume, that is going to be very, very telling. We can go back here historically and look at precedent, and indeed it was just the beginning of a longer downtrend.
Yeah, absolutely. So as you can see, my eyes, when I look at the chart, boom. All right, happy trading, everybody.
All right, take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.